to buy today than it was to buy in March and in April because we're up so much. But I do think you still have the liquidity situation that's happening. We talked about M2 at 14.5% year to date. That's huge in terms of liquidity. We've talked about the reopening, and we have 95% of the states by the end of this month that will open. And so you will start to see progress in terms of the economic data. And then also you're getting solid data points on the vaccines and the testing. I think the nuance is right, though. Mike touched on it. You're seeing cyclicals outperform in the last couple of weeks, actually. And I think a lot of that is because we are reopening. We are seeing a little bit better data points. We got the NAHB data earlier this week that showed an improvement in May. We had the market PMI today, better than expected. We had the Philly Fed better than expected. The numbers are still horrific, but they're better than April. And I think that April and May are going to be the trough in terms of what we see on the economic front, and that's encouraging.
Still another 2.4 million people, though, filing for unemployment claims. I mean, Mike, on a day where you had an escalation in the rhetoric between the U.S. and China, certainly on the president's Twitter feed, and you know, continued stories and anecdotes like what we just heard from President Bostic of the Atlanta Fed, which was a kind of patchy, muted reopening economically for that state. I mean, are you surprised on a day like today we're not down even further? And this is an opportunity. The headlines are there if the market wants to pull back. We've had a 3% rally already for the week.
Sure. I mean, it wouldn't have been surprising to see that. Yesterday, we talked about how in the very short term, some of the tactical indicators like the put-call ratios were looking a little bit overheated. Everyone's talking about that. So, yeah, it would be logical. But I also think this move about reopening has been all about kind of the incremental direction of progress being toward easing of restrictions. And it's going to let off some of the pressure in some of these groups. Nobody's claiming that it's already gotten traction. Nobody's claiming it's visible in the numbers. So it has been a little bit of a leap toward this assumption that it's going to get better. And, you know, who knows? Tomorrow we could easily back off on the same exact mix of news. So I don't think you can have a high conviction about exactly where we go for the next couple % from here. But I've been saying all week and even before that the idea that we're reopening and there's going to be perhaps a smoother path along that front is not disprovable in the short term, no matter what the numbers today say. So that leaves clearance for whatever the market decides to try to race toward in terms of a likely scenario.